Hello, friends. Good evening. So, meeting you guys after a long time. Many new things which have come up. So, a good uh, intro to that, or maybe something where the markets are actually making us use those products more and more. So, today's webinar basically will cover few of our pro products. So, the list is long, but I try to focus on some products which becomes very handy when we are doing active trading in the markets. So how to use them, what are the functionalities, and what they actually help us, or how they actually help us in trading is something which we would be looking at those. So products would be like a seasonality. We have three types of seasonality charts: price, IV, sector. Then certainly we have charts. Both we have single leg charts as well as the strategy charts. Then we have a unique concept that's basically a price OI percentile. So which becomes very, gives us a crystal clear view how the trend is moving. Then something on the open interest, which we have recently introduced, a different type of chart which helps you us to give a bird's eye view of how the market is, sentiments are changing for the day, how the things are moving. Then you have the option chain, and in that you have the what if analysis. So let's move on to it. So I'll keep it to the web.concept.com. So we'll go through the thing on the web.concept.com, and most of them are there on the Android. Few are not there on the iOS. So however, web.concept is available to all. So definitely you guys can go through it and make the most use of it. Application, the mobile apps will very soon be in tandem with what the web is there. There are few regex which are taking place. So once that is done, everything will be on the same page. So let's move on to it. So if you look at, when you click on the left-hand side bar, so you see all the products which are available. So we have nearly around 46 analytics products available across the concept thing. So it's for the futures and options both. So basically how to use data to decide the trend. Also how the data is giving us the view of the trend is something which we'll be looking at. So the first product which I would like to discuss would be the open interest, the new one. So open interest have been like used by everyone. So most of the trader who are in the option will, I won't say that I'll find anyone who will say, I don't know the open interest chart. So this is something which is most widely used. So what difference this particular chart brings to you is it gives you the clarity of how the trend is moving. It gives you the clarity like how the writers are feeling the pain. Are they actually shifting considerably, or it's just the tip of, it's just a minor shakeout which is taking place and not a concrete one? So if you look at the bars, the green is definitely for the calls and the red is for the put. So here the color code becomes very important. So now you can zoom in, zoom out. The upper functionality remains the same. You enter the symbol, you enter the expiry, those, and the graph gets populated. Now you can zoom in. So this is Nifty. So basically, if you look at the green, the dark green, which is showing here, it shows like how much the OI is added into the call strike. So if it's a positive one, so it's showing how the call has been added. So you see the size of the bar. So basically now we don't get confused with how the range is, the value wise. At times what happens, if the change is just 2 lakhs and it's the highest in the entire chain, that range gets, you can say, zoomed in because of the 2 lakhs thing. But now everything comes to a common level of measurement. So you can see the size of the bar and you can gauge out like, oh, this is the highest one. It was highest and today it has shedded considerably and the prices are just moving out. So that shows that the writers are really feeling that pain. At times you might see that its prices are going higher, but we don't see much of the shakeout. So it could be just a temporary phenomenon which is taking place. So if I have to understand Nifty, we have an expiry tomorrow, 24th December. So if you look here, 13,700 call. So we see that the total OI is 37,70,000, out of which 4,86,000 got added. So if you look at this portion of the green bar, you see that what was the addition which took place today. So the complete bar is the as on date, and the light gray shade of green will tell you, sorry, the dark shade of green will tell you like how much was the addition today. If you look at the upper strikes, so like 14,000, 13,800, we saw the shedding taking place. That shows that the writers which were on the higher strike moving down. Definitely, as the expiry comes closer, the premium value is negligible. So some might have actually booked profit also. Some might consider selling out to the closer strike. So 13,700 becomes a key level from tomorrow's expiry. Difficult for, as of now, the data shows for the call writers are very much strong headed. Now, if you look here, 13,600. So today total OI is 22,92,000, out of which we saw 3,23,000 getting shredded. Okay. So say for instance, yesterday it was close to around 26.2. We have around 3.23 getting shredded, and the remaining we have around say 22.93. The put one, so if you look at the put OI, you have 15,65,000 OI, out of which 10 lakhs got added. So this is the bar of the put. So you see that more than double the puts were added in 13,600. Still, it is not higher than the call. So that means the resistance are still provided from the call writers. So once you see that the put writers outpace the call, so the put OI outpace the call OI, that means the support is getting stronger and stronger. When you see that the call OI is outpacing the put OI, that means the resistance is stronger. So here you are actually looking at the magnitude. So that becomes very, very important when you are trading, because what is the size which we are dealing with? Okay. Now, if you look at the considerable put writing was seen in 13,500 P. So that means, yeah, here there is something which is there. So the put writing 13,500 is a very strong support for 24th December expiry. Now let's change the expiry. Okay. So now I have 31st December. So in case of 31st December, so what you see that 13,500 C, that's a in the money C. It's not even out of the money. It's in the money C. In the money call is still showing an addition. So take this with a pinch of salt. So something which we can decipher immediately. We don't need anything else. We are just seeing the graph. We are reading the data. So you are seeing how the OI is moving, how the bar is increasing, decreasing, shedding, how the things are moving out. So 13,500 call put, that becomes a key pivot from the December expiry. That's 31st December. So definitely this week calls out for a good volatility in the market, something which was missing for long period, and we saw that shakeout taking place in this week. So I don't think so like it's gonna be a short-term thing. So something we need to start living with. So basically, this is how we need to read the data. So 13,000 is a distance away. That's a concrete support presently. So if you start seeing this unwinding taking place, shedding taking place, then we can see that the panic is again coming up. Okay. Now, say if I change today IT stocks were under the limelight. So let's look at how Infi behaved. Okay. So now this is what you see the beauty. If I have to see the graph, nothing. So price is 1252. What happened? If you look at 1200 call, the size of the 1200 call was the highest yesterday. We can see the entire, if you see the green and the shaded and non-shaded part totality. So you see how the size of the bar was. And today, nearly it is coming to half. So that shows that the call writers were really feeling very fearful. So you see how the shedding took place, and we are left with just a bunch of OI of 8 lakh shares. The same took place in 1220 call, 1240 call. This is basically a short call covering, because you can see the tendency is just not in one strike. You are seeing it across the strike. So that means the 1200 call, 1220 call, 1240 call, all writers were started feeling the heat, right? So that's something. So this is end of the day. So we are doing post-mortem thing. But if you start seeing the signal at the start of the day itself, that you are seeing the unwinding taking place in multiple strikes together, that's something you have to be watchful for. That's something as an option trader, option buyer, we should look out for. Now, call unwinding, that means the call writers are feeling the heat. So who should get confident? Definitely the put writers. So if you see that the put writers are now getting aggressive, that's again a positive sign. So you have 1200, you have 1220, you have 1240. Everywhere you are seeing a significant OI. So if you have to compare it from the previous day, definitely in few strikes it is more than the double. It is 3 times. In this strike, 1200, you can see it's nearly around 40%, 30-40% increment. So this way you can see, you can actually, if I remove the cursor, I keep the cursor here, just see how the things are shifting. The put unwinding at the lower strike, put addition at the higher strike, that means the put writers are shifting higher. Call unwinding at the lower strike, call addition at the higher strike, that means the call writers are shifting. So entire shift is taking place, which itself is something which a bullish trend talks about. Correct? So now let's see, HDFC was subdued. Anything concrete we are seeing here? So if we look here, price is about the highest call, that's 2400. There is an addition taking place in the 2400 strike, and there is the unwinding taking place in the 2400 put. So addition in call, unwinding in the put. So the first sign of cautiousness. Upside, if you look at 2450, significant call addition. So you have a range of call writers standing up. So if one strike is giving up, the second strike is holding on, like the writers are stubborn, those are writing. Unless we don't see that the shedding taking place entire, all the close strikes, that means the trend is still on the sideways to the bearish one. Put writing, so put unwinding we are seeing, lower side minor addition. Again, if you look at 2300 puts, there is an unwinding. So resistance getting stronger, support getting weaker. Clear? So nothing, you are just reading the bar. So today you are just seeing the size of the bar, how big the bar is compared to the others, how much magnitude of change has taken place today. So if you have to see, oh, there is nothing I have to talk about. You can see it's basically a chart speaks 1,000 words. You don't need anything else. Just read the chart. So if I have to look at, say, Bank Nifty. Yeah. So I can scroll it. So you have 30,000 call, which is now increasing. So the addition was nearly around 15-20% only. So it has now near towards its highest call strike. If you look at the put side, major additions was seen only in the 29,500. So the band of 500 points, how the Bank Nifty move is still intact. So right now, 30,000 higher strike is the resistance, 29,500 is the support. So basically when you play weekly, you need to look at the intraday basis. So Thursday, when you're seeing it during the day, see how the bars are shifting. How was the size earlier? How the size is gradually moving out. Now, as a pro user, you just don't need to look at day-to-day basis. Basically, you can look at the intraday basis also. So if I say from 9:15 to 10 o'clock, things have settled up, many writings were taking place, how the activity have been post 10 a.m. So we can do that. So say for instance, I do 23rd. So I select today's date. I select 10:00 set. So this was the case of today after 10 a.m. So there is a minor shedding after 10 a.m. Okay, both in 30,000 call and 29,500 put. So everywhere we saw the shedding which was taking place. So this is the case after 10 a.m. So if I have to change it to say 2 p.m. So from 2 p.m. this is the case. So the most of the OI got shedded up, like almost 25% shedding was seen. So this, if we do it on an intraday basis, so say for instance regular interval, say half an hour difference, you start seeing how the shedding is taking place. Is there any panic scene? Is there any trend which is showing, seeing unwinding? Then we can realize it, like keep the morning, say the first 45 minutes, whatever the writing was done, how the things has panned out after that. Or if at all say, is there any event which has come? So you can always compare things before event and after event. So this will help you to know how the sentiment is shifting. Okay, so this is one place where you can see in totality the magnitude of the shift, the magnitude of the resistance, the magnitude of the support, and how the strength is spanning out. Rest is there. So the earlier chart still exists. So you, if you want to see only open interest, you can definitely select the open interest horizontal chart, and open interest and change in OI you want to see in a different tabs, definitely that is there. And the first tab, the by default one, is the combined one. So here is there. So if I have to select, say, Reliance, strong resistance, multiple resistances still existing. So difficult as of now to breach those. But once it breaches, so things could get better and better. Now, so this was the open interest, the newly launched charts which we have done in the current release, the recent release. Then you have something called as a price OI percentile. So this is also a new product. So basically when I have to talk about the percentile, so just a background. So percentile is always to do with the days. Okay. So when I talk about price OI percentile, it means how many, so you have a look back period. So if I say 180 look back period, so in case of last 180 data, how many data we see that the price is below the current prevailing price? So how many data points we see that the price is below the current prevailing price? Similarly, how many data points we are seeing where the OI is below the current prevailing OI? Okay, so you have a price percentile, you have a OI percentile. So you have the speedometer which tells you the strength. Now let's go back and revise our basics. So when you say the price is on the higher end, supported with a good OI thing, you say it's a significantly long addition because you have a fresh OI which is taking place, right? When the price is at the lower end, but the OI is at the upper end, that means it's basically a short, because prices is seeing the pressure and you are seeing a position getting building up. So it's a short build up. When the price is going higher, but OI is down. So that basically is like short covering drive which has taken place in the underlying, and that's where the price have shooted up. And when you have the price down and the OI also down, so that means it's basically a long unwinding, not much of the so basically a profit booking tendency. So whenever you see a OI on a upper hand, that means that's a fresh, you can say, position getting added up. So always that has a upper hand compared to the OI which is at the lower point. Okay, now if you look here, so you have all the FNO stocks. So you have a look back period. So by default, we have kept it as 180 period. You can change it and make it, say, I want to make it 250. I can do that. It will give a larger perspective of data. If I have to do a short term, if I say that, okay, tell me in last 2 months. So if I say last 40 days, how the things have been. So this will give you the comparison based on the last 40 days. Okay, so that's how we read the data. That's how we infer from the data. Okay, now you have the various type of sorting. So you can do via symbol, you can do via price percentile, via OI percentile. Okay, so when I say price percentile, and let me do the look back period default of 180. Okay, so now what I see is basically so you have Adani Enterprises, Asian Paint, Berger Paint. Now everywhere you see the price at the upper hand because we have sorted according to the price percentile. Now look at how the OI has behaved over this period. So the price at the upper point. So when you see a price percentile of 99, say 90 above, that means prices towards the highest point of that data points. And if the OI is also above 90, that's the OI is also at the highest point. So if you look at the Adani Enterprise price at the highest point, OI is around 67. You have Asian Paint, again prices at the highest, OI is around 72. Berger Paint, the price is at the highest point, but the OI is just 10 per. So your OI percentile is 10. So if you look here, you can click on this and you can open the chart. So basically now we have made a interconnectivity. So you can say intermobility. From one product, you can move on to the another product. From that product, you can move to some other product. So that is basically we're trying to combine few products which are quite closely related to each other. So if I say and look at the future OIH. So if you look here, this is Berger Paint. So price is nearly at the highest point. But if you look at the OI, so OI has started moving in last, say today was the thing where you see the OI building up. So OI is at the lower range. So though the price at the upper point, but the OI is not that high. So if you start seeing, so either this could be basically a short covering which takes place in some instances, there could be cases short covering. Second instance is like we need to look at such data points and look whether now it is supported with the OI increase or no. So if this OI continuously start increasing, then it shows a positive sign. Otherwise, we should avoid it because the move in the price was not supported with the OI. So if I move back to price OI percentile, then you have Biocon where the price is at the upper end, OI is at 27. Cipla. So they both are from the pharma space. If you look at the Cipla, now price have started inching higher. So the consolidation band is done, price has moved higher. Till here, you don't see much of the OI, so it's more accumulation. And now you see the OI is increasing. So you can see how the absolute OI change have been. So mix. So now we can look at the data closely and see this trend of OI is continuous and then supported with the price move, then it could be a good thing to trade. So you can go to the built up cycle also, right? So you have the cycle data. Okay. So you have Apollo Tire. So you can filter out the stocks which are having a good OI along with the price moves. And you can look at the data where the OI is not there. So price at the upper point and OI at the upper point is basically a good, strong, long candidate. Whereas the price at the lower end, right now the market is everything is at the top only. So very rarely we are seeing anything which is at not moving. So if you look at the lowest, you can see is ICICI, GI, Reliance, BPCL. So where the price is at the mid level. So it's around 45.50. That means at the mid level of the range. So it's more a consolidation taking place. And if you look on a daily basis, you can see how the parameters are changing. Right? So similarly, you can check out from the OI percentile also. And now from here, you can see which are the stocks which are trading at the highest OI of the last, say, 180 days. So Vedanta, Wipro, L&T, Adani Ports, NMDC, Tata Steel, Grasim, Idea, IDFC, Shriram, Escort. So you can have a list of stocks and you can see how the price and OI are moving. So if you look here closely, you will see how. So this is L&T. So L&T, the price run up was seen along with the OI part. So even in this fall, the fall did not damage the price. It was more an accumulation which was taking place, and so the prices shooted up. So when you're reading the data, you need to actually look in totality how the price and OI. So what was the fall and how did the OI got affected? If not, then how did the price behave? Right? Now you can have a historical price OI also. So say for instance, I am looking at say Adani Enterprise, symbol wise price percentile. So this will tell you the historical, how the price percentile and OI percentile for this instrument have been. So the prices after September have been on the upper hand only, and OI, it's basically moving up and down. So basically you will see the shading on the expiry day, and again you can see the build up. So you can actually change the stock and see how the things have been moving. So this is SDFC. So if you look at the SDFC, the price is on the upper hand, but the OI is at the lower hand. So the move on the upper hand is not supported because of it's not supported by the OI. So that's the reason why we see that the prices are not able to sustain, because the fresh built up is not happening. Once we start seeing that the fresh built up, fresh participation is taking place, that's a positive sign, right? So you have the price OI percentile, which gives you entire, you can do the filtering and see the pick up the stocks where the trend is significantly short, trend is significantly long. Now if you look here, this matrix basically tells you how many stocks are there where the price is greater than equal to 80. So that means where the price is trading at the upper level. So above 80 means like a significant on the upper zone. How many stocks are there where the price is less than equal to 20? How many stocks are there where the OI is greater than equal to 80 and OI is less than equal to 20? So this way you see that current market, everything is on the upper scale. So you see majorly, you see the price is greater than equal to 80. Correct? So this particular product will help you to scan the stocks based on that built up summary, and you can gauge how the trend is building up in the stock. Now we have chain. Okay. So basically chain is the, I guess so, the widely used one when it comes, because that's basically gives you the entire snapshot of how the market is behaving, how the market activity is there. So you have the call and put. So it's basically the standard way of looking at, where most of us are comfortable looking. So you know where the strikes are in the money, where the strikes are out of the money. So the greens are the basically the lighter shade, background shade of green is basically in the money options. Lighter shade of this purple is basically out of the money options. Black is basically the at the money options. So now you have the chain. The most important thing as an option trader when we take a trade, so if you are like a weekly traders and you're carrying forward your trades, it's very important to know like how your prices will behave at any given point of time. Because when you're trading, it's just not the end of the day. The theta or the time doesn't decay just towards the end. It's decaying every day, and your prices are getting impacted because of it. So use this what if analysis. It's something very unique, where not the days, you can be precise in terms of date and time also. So if I say I want to know how the price will behave on 24th by say 10 a.m. Okay. Now this is the case of where the price will behave at 10 a.m. Now I've kept the prices stable, 13,617. What if the price moves to say 13,650? How the things would be? Okay, so well, I've selected 31st December expiry. So let's select the weekly expiry. So you change the expiry and make it 24th December. Okay. Now you have, go to what if analysis, you will see your expiry. Go to date time, date, select 24th and say select say 10 a.m. Now this is how I don't change the price. So basically the fair price is 13,610. So assume everyone knows the fair price. So in a weekly option, we don't have a future price. So what we have calculated is basically the synthetic future price, which is also called as the fair price. Okay. So now you have nothing changes. Market remains as it is. जैसे बंद हुआ था वैसे ही खुल गया और कुछ नहीं हुआ, right? So if the market were to start at the same point, doing no effort, still the option writer will make money of nearly 6 points on 13,600, just because we are closest to the expiry. And now basically that curve is getting steeper and steeper. So when you're trading into weekly options, you cannot afford to miss out on the time part, because that's basically is the most crucial of the elements you see. Now, if I say Nifty moves to 13,650, so what will happen? Your 600 call will be up by 21 and 600 put would be down by 18. So net you are making just around 3 rupees despite Nifty moving by 40 points. So 13,610, it moves to 13,650, but the net gain we make is just 3 points. Correct? If it is less than that, we'll still end up making a loss. So it's not guaranteed when you're buying an option. So I buy a call option, underlying going up, उसका मतलब है कि हम पैसा बनाएंगे. It's not that way. It is completely mathematical approach. So you need to understand how the time will impact you. So when you're carrying forward your option trade next day, and when you're having an expiry, be alert in understanding how the price will get impacted, the option price will get impacted. So when you're taking a future trade, so most of us, what we do, we always do a technical analysis. We feel that कि हाँ ये underlying है ना, इधर से इधर तक जाएगा, चलो मैं एक at the money option ले लेते हैं. We never look at how the option will behave with your price, with your underlying. So at this junction you can actually have a look like कि मेरा अंडरलाइन 13,650 हो गया है, अब ऑप्शन में क्या इम्पैक्ट होएगा. सो इफ आई एम बाइंग कॉल ऑप्शन, मुझे 21 रुपए का प्रॉफिट है, ठीक है, पर अगर मैंने कॉल और पुट दोनों बाई किया हुआ है, नेट नेट मुझे हाथ में कुछ नहीं आया, राइट. द सेम थिंग इफ इट्स अ little far off expiry, it will still benefit you, but as you come closer to the expiry, the time remains very crucial element, right. Similarly, say I take 13,000, I assume say it comes back to 13,550. Your 13,600 put is 26 up, 13,600 call is 23 down. You're making just 3 rupees. Now let's see the beauty. It was 10 a.m. Now I assume the same things happen at 12. Okay. You are ending up making a loss. So जो प्रॉफिट आप कर रहे थे, भले माइन्यूट ही था 10 बजे तक, वो 12 बजे तक लॉस में कन्वर्ट हो गया, बिकॉज अभी वो ऑप्शन जो है अपने इंट्रिंसिक के पास आने लग गया है. द ऑप्शन, द टाइम वैल्यू विच वॉज देयर वॉज डीकेइंग एट अ फास्टर पेस. सो जो 10 से जो पेस जो है वो चेंज हो रहा है. सो इट इज नॉट अ कॉन्स्टेंट वन. ऑप्शंस आर नॉन लिनियर, सो दैट नॉन लिनियरिटी प्लेस आउट, राइट. सो दैट्स द रीजन यू सी दैट एक्सपायरी के दिन बहुत हलचल होती है. फर्स्ट हाफ अलग पिक्चर होता है, सेकेंड हाफ अलग पिक्चर होता है, बिकॉज बहुत सारे ट्रैप्स क्रिएट होते हैं. यू हैव अ कंप्लीट शिफ्ट इन डेटा पॉइंट्स. सो पीपल डोंट स्टिक इन ऑप्शन, राइट. दे आर वेरी वेरी क्विक, बिकॉज when you are a writer, your gains are limited, but your losses could be unlimited or undefined. I won't say unlimited, it could be undefined. So if you don't look out into it, so that's the reason why time plays into it. So option chain what if is a place which will help you to find out the reasonable price of the option based on the Black-Scholes model. Definitely, given your price, given your underlying movement, given your vol. Now here I have not changed the volatility, but say for instance we have a say RBI policy, say 11 o'clock or something RBI policy. We know say after RBI policy I see that the Nifty can or Bank Nifty can give 200 points jump. Also I see that the IV can fall by 20%, right. बिकॉज आरबीआई पॉलिसी हुआ है तो आईवी शूट अप हुआ है, आरबीआई पॉलिसी चला जाएगा तो उसके बाद आईवी एक बार क्रैश होएगा, तो वो क्रैश की वजह से भी क्या इम्पैक्ट होएगा. सो इफ आई से द आईवी जो है फॉल्स बाय 10%, you will see how the prices are behaving. So it's really very important when you're taking a larger trade into the option, have a perspective of time. Now these things would get even difficult when you are nearly like a 14:30, 2:30, right? So you have a 24 hours clock here. Right? Now this thing, now, so if you change the IV, so as you come closer to the expiry, everything moves on to the intrinsic basis. IV becomes less and less important. Everything moves on to the intrinsic basis, right? So you see chain and chain what if helps you to understand the actual price wise how the things would move on, how the premiums will change because of the change in underlying, because of the change in IV, because of the days change, right? Now, as an expiry trader, something more interesting is also to look at the straddle index. So basically what does the straddle index is? Basically a very simple, the combined premium of call and put across the strike. So it tells you how the index, the straddle values have moved on. So if I have to see, from 13,500 above, so the straddle values were lower. So today it was down only because we did not got that much of movement which leads us to making profit, because the loss due to time was more than the gain because of the direction up move. So until we get a very strong up move, we won't be able to make money. The same, say for instance, I do for the bank nifty. So you see that there was a unwind, there was premium fall in almost all the strikes from 29,500 to say 30,000 or so, because the put value fell significantly. The call did not give much of the money because there was a fall in IV also. There was a time which has come closer also. So that it's a double whammy. So IV की वजह से भी hit हुआ, time के वजह से भी hit हुआ, और जो underline के वजह से gain होना था वो नहीं उतना हुआ. So it got set off. So 30,000 call was up by just 15 points. 29,700 call was up by only 57 points. Right? So this straddle index helps you to see how the straddles are behaving across the strikes, whether the straddles were up or down, whether the IV. So if you look here, the IV for most of the strikes was down only. So on an average, this is the average IV of call and put, and how the average IV moved. So it was like it down from 2% to 4%, right? So as if you're an expiry trader, keep a watch on the straddle index also to get the understanding of how the market will behave, right? Just give me a second. Now let's discuss something on the charts. So I will explain you first the product, and then we can look at how we can connect the dots and see how to use which product together. So most popularly used intraday products are something what we can discuss. So now first let's understand the charts. So basically what unique comes with the chart is basically you get the view of how the price is moving, how the OI is moving, and how the Greeks are moving. So the edge lies only in how to understand the Greeks in the chart. Now if I look here, you have Bank Nifty. So we saw that there was a good sharp recovery taking place in the last 2 days. So you can select the day. Now by default on lower panel you have the OI. So you see the OI which is gyrating part of it. Okay. So there was a shedding which took place, and then you are seeing the addition. Now let's look at the option. So when I put Bank Nifty, the expiry 24 December 20, and say I am looking at 29,500 C. Okay. Now let's look at say 5 minutes data. Now, if you look at the data, 21st December, so where the OI was hardly anything because we were trading above 30,000. So we were around like a 30,500 and so. We saw that the OI significantly got added up. So right from like on 21st December, 2:30 onwards, when we saw the sharp fall, till 22nd December, till 12 o'clock, you saw that the OI was there going. So that means the writing was taking place considerably in this strike, 29,500, because prices were going and the writers were writing out there. Suddenly, we start seeing that this unwinding taking place. So you start seeing whatever the OI was added. So OI moved from like a 50,000 to nearly like a 9 lakh. And then we saw that this 9 lakh moving back to 4.5 lakh. So we saw there was a short covering. So whenever you're taking a trade or whenever you see a sharp move in the market, always try and look out for their option charts in combination with the OI part and the Greeks part. So again, if you look here, the OI has started coming down. So this is like a call writers which are unwinding. Now let's see how the put has behaved. So if you look here, the interesting part, so we saw 23rd to today, there was a good put accumulation taking place, but post that we saw that the OI is now coming down. So something which need to be watchful. So despite Nifty being at 29,900, we are seeing the OI which is getting shedded. So if this tendency continues and we start seeing it, then there could be a opposite move coming in. Now, if you can watch, go closer also to the strike. Say I do 29,800 put. So you have this 29,800 put. So here again, there is a OI which is shaded in the last, you can say last half an hour part of it. So this is something which we need to be watchful for the tomorrow session also. Now, when you go to indicators, just type Q, you can see all the indicators which are there. So you have delta on price, gamma, IV, and those. So being a pro user, you have all the access. In the free, we don't have the Greeks, we have the OI only. So if I say I add up the Greeks, so I add up delta, gamma, IV, theta, vega. Okay. So one thing is very much we have to see it. So we tend to look at like gamma is a very small value. So if we look at just the value of the gamma, it would be always in a decimal like a 0.005, 0.01. So we rarely put any effort to think that it is of any value. We tend to ignore it. But this is one of the like a slow poison thing. So if you don't have a proper eye on it, it can change your entire PNL considerably. So that's the reason when you're a writer, you really cannot afford to look at forget to look at how the gamma is moving. So if you look here, what is more important to look at how the slope of gamma is changing. So just by looking at the graph of gamma, you can figure out like whether now the gamma is again started inching higher. So once that comes into play, that means now the momentum would be very strong. So the momentum of the selling part would be strong, or momentum on the buying part would be strong, but the momentum increase is same. Okay. So if you look here, the pink one, there is a gamma, it's like a 0.004. You saw nearly when the premium was 474, delta was minus 0.63 and the gamma was 0.005. It started giving a breakout and started inching higher. So we saw that the price saw a considerable fall, right? So and Bank Nifty is one of the most volatile instrument when it comes, because you can say the swings which we see during the day itself, in intraday itself, is quite wide. So here it's very important to look at the data point closely, how the gamma. So what's more important is to look at how the slope is changing. So something which was sideways, it has shifted its trend. So that's something we need to look out for. Like if look here, delta from minus 0.8 moves to minus 0.5. That means something which was in the money is now moving to at the money, right? So if I say 29,800 was an in the money option, now it is moving to at the money option. Now I can change, say I do Nifty 24th December 20 and say 13,500 C. So you have here how the OI and the price behave. So you have here like 123 price, OI 5,56,000. The price moving to 33 with OI of 35 lakhs. Thereafter, we start seeing that OI is on a declining phase. During this period, we had some in the money call becoming at the money because we saw that the prices were falling. and on then out of the money. So always as an option trader, we don't have to think like I have bought something like a in the money, which is similar to future. So my things will always remain the same. No, so the option changes its characteristics from in the money, at the money to out of the money. So you need to understand how all the three behaves, right? Similarly, you can see how the intraday IVs have been. So you start seeing the jump in IV. So when we saw this fall on 21st, it was accompanied by a significant jump in the IV. So when you're a trader, so you see this spike coming up, that means things are changing. It's not as it was earlier. So spiking IV always denotes something like a strong momentum is setting in. So the momentum could be bullish, the momentum could be bearish. So everything this you can look at on the intraday basis. So the time intervals are in the interval of 5 minutes. So you can look 5, 10, 15, 30, 1 hour charts. Then you have this gamma. So clear cut, if you look here. So since yesterday 2 p.m. onwards, you see that the gamma slope moved up and we started seeing this call shedding taking place. The writers now started panicking. So the premium of like a 30, 40 points, then eventually moving to 130 points. So all the data are interlinked to each other. So if you watch it up on a close basis, on a continuous basis, you can join the dots. Correct? So in option trading, few parameters are there, but they are quite interlinked to each other. So look out on those data points very closely. So this way, in the single chart, you can look out for the any single options, what you want to trade. So be it index, be it stock. So if I look at INFI, so let's see first how the underlying INFI moved. So for, you will not get the Greeks for the future chart, right? Now if I say INFI space 31 December 20 and we look at say 1200 CE. Yeah. So from this point, you start seeing how the OI shedding took place continuously. So this was 22nd December. So nearly like 115, 130, how the OI started falling up. So this was the OI move. So yeah. So if you start seeing how the OIs and the price, so it's completely like a indirect relationship. Fall in OI, price is going higher. It's like a short covering which is taking place. You see that the delta, which was nearly like a 0.5, started inching up because it's getting in the money. So another way of looking at the options to look at tracking its moneyness. So delta tells you the moneyness of the option, right? You start seeing the gamma. So gamma becomes less sensitive because we start moving up. So gamma is always sensitive towards the at the money option, right? So gamma is as it moves in the money or out of the money, it becomes less and less sensitive. Then theta. So though it has inched up, but it is not because the directional move is significantly higher than the anything lost because of time. And the vega. So you have a complete bird eye view of how the underline is moving. Now, if I look at say closer strike, say 1260. Okay. So now this is the 1260 call. Again, you have the OI which is there, right? So any uptick in INFI to continue, we need to see this call unwinding taking place. Okay. So if you start seeing this unwinding, that means again a push up could be seen in the prices. So the single chart, basically you can track your underlying, you can track the option prices, open interest intraday basis, delta, theta, vega, gamma, IV, all 5 on the intraday basis. Now, so in a single chart, you also have, in charts, you also have like a strategy chart. So basically what does the strategy chart does is basically when you're taking a strategy, how the strategy premium have behaved. So whether the premium is on the rising point, it's on the shedding point, how the moneyness of the strategy is moving. So like you might have built up a out of the money bull call spread. Now it has moved at the money. So your pace of profitability will increase, because earlier it was OTM bull call spread. Right now it is at the money bull call spread, and then in the money bull call spread, that way. So I've added few strategies. So how to do it? So you can go to create strategy. You have your predefined and custom strategy. So say I do predefined strategy. I want to do Nifty. Say I want to do Bank Nifty. Bearish strategy, limited risk one. So I do say bear put spread, 24th December. Let's say I do 30,000 put buy and we sell 29,600 put. So Bank Nifty bear put spread. You can write your own strike, 30,000, 29,600 P. I save it. Now I click on the charts, and this is how the strategy PNL have been, right? So if you look here, so if we look here, simple, on 21st December, we saw this spike. So you saw this premium breaking out, and from 105, it moved to 340. Okay. And then again, it has now cooled off and moved to 145. So this becomes a crucial level. Now let's add up the Greeks. So I put delta, theta, vega, gamma. Okay. So now if you look here, so here the delta was nearly like a minus 0.09 thing. So it was like a out of the money bear put spread. That bear put spread gradually has started moving in the money, right? So you see this in the money. Also your moneyness is depending upon the time. So जैसे जैसे expiry pass में आता है, you see that the delta is getting more and more, or like your option is getting more and more sensitive to it. Now theta, so if you start seeing how the theta, the earlier 5 rupees theta has now turned to a 21, vega and gamma. So gamma, you start seeing the gamma positive becomes gamma negative. So when you have a hedge strategy, the gamma is not that sensitive. So one thing, you can have a sound sleep when you go and take a trading decision. So you don't get impacted because of the gamma. Yeah, but when you have like a volatile strategy or like a oscillating strategy, you unlimited PNL part of strategy, there the gamma becomes much more violent. Okay. So now here again at this point we need to see whether it's the strategy is holding up, or like again it can become to approaching towards 300, 500 levels. So you can have a strategy PNL. So this can help you to look at how your profitability will get impacted. Since it's a weekly one, it gets active towards the last 6-7 days only. Similarly, you can have all the strategy. So if you, all the strategy which are there with you will be seen here. So if I look at Infi, so this is the Infi strategy. So you can anytime do the refresh chart and see how the data is moving up. All the data are coming up. Yeah. So here you can see how the premium, the strategy bull cost 8 premium moved on to almost 19. So you need to be very alert where the strategy is turning out. So say for instance, you're making good money, but booking profit becomes a very, very difficult task for anybody to understand. So once you start seeing that the premium is now changing the direction, time to book out from your strategy, or at least do the part profit. So this way your strategy chart will help you to ride the trend. It will also help you to book your profit in a staggered way, and you don't lose out completely because of the sudden volatility coming in the market. So this is what the strategy charts look out for. Okay. So this is from the charts perspective. So chart is basically, if you're an intraday trader, you're a positional trader, expiry trader, be whatever, it will help you to have a sense of how the entire data is spanning out, how the Greeks of your strategy is there. So because when you're taking a strategy, though it might sound like it is the Greeks are not impacted, but definitely any magnitude, when you're doing something like a unlimited strategy, like a ratio call spread. In a ratio call spread, things will be completely dirty when the gamma effect will come into picture, because you are selling more option compared to the buying of option. But in a bull call spread, bear put spread is 1:1, so you won't get much impacted. Also, you will come to know like, oh, now the strategy has started showing the delta is getting more in the money. I can add on to the strategy. So say for instance, I take 50% quantity at first go, and 50% when I see the breakout coming up in terms of the momentum. Then you can ride the trend. So this will help you to do the proper risk management also. Correct? Now, so if I have to look from the intraday perspective, something I will look of is like the FNO news also. So basically, keep a third eye, I would say. As an option trader, we have a lot of eyes, because we need to watch out the data very, very closely. So during the day, as you are in the first half of the day, check out which of the stocks, which of the strikes are showing the momentum. So FNO news is basically, it scans the market and pick up the high conviction one, or where the significantly volumes have taken place, those ones. So that's based on our proprietary logic part of it. So we scan and we pick up and show the strikes where the considerable things are changing. So for instance, at the end of the day, it was like a Wipro, which is coming up. Then you have a Volta 770 put. We saw there's a long unwinding. So that means the prices were correcting, right? Then you have a TVS Motor. If you look, it was a short covering. Wipro, we see that. One second. So if you look at Wipro, there was a long in call of 390 and there was short covering in 350 call. Then you have Nifty 15,000 is as well as we can ignore it. So it's quite out of the money. Bank Nifty 29,500 call. So we saw some amount of short covering. So this way you can scan it. So look out in the starting part of the day, like from 9:15 to 11 o'clock, to gauge out which are the stocks which are participating, right? Then definitely you have the synopsis. One sec. So you have the synopsis, like which were the stocks participating, where were the long. So you can click on it and you can filter out. So if I want to select only long unwinding, short covering, we can see the market map. So if you look at the pie chart, so you have 82 longs and 40 short covering. The shorts were only 11 in today's market. Then something on an intraday basis, if I have to look out, so basically volume analysis will not just be on the intraday, but definitely something when you are in a volatile environment, you should always keep a watch on like what were the key price volume levels. So if you look here for the Bank Nifty, this 29,100 is a key support level. So like this area of 29,000. So if you look at from the last 3 months, you have seen lot of congestion or the volume cluster taking place at this level. So that day also, when we saw the price, the sudden fall, the bank nifty took a good support from this level. So when you're a trader, be it intraday, be it a positional trader, you cannot afford to miss out those levels. Like कि चल जोर से गिर गया तो मैं बेच दूं, ऐसा नहीं. So you have to have a clear sense like कि there is a volume cluster at this level. Is the price reacting to it? It's taking the support, then we can see a good bounce. If it breaches that level, then a fall could be steep, right? So now for any trading perspective, you look at 29,000, 29,100. This is a very strong zone. If it breaches that, then we can have a completely a different picture. But right now, it has taken the support from there. Similarly, if we look for, so this is applicable for the stocks also as well as for the indices. Now in the Nifty, if you look here, the ranges are like very wide. So the major cluster area is this 13,000 and 1316 is nearly similar. So it's more a oscillating part. It's not something like a clear cut one direction. It's an oscillating part. Look at INFI. So it has taken up beautifully the support from the 1100 zone, and now it is surpassing higher. So the trend is significant. So you can see that a lot of volume cluster which was taking place at this 1100 level, and now the breakout has taken place. So you have already the position getting built up, and now it's time to fire up. You have this SDFC. Now SDFC is in a little correcting mode. So if you look here, the closest band or the most important is this 2436 level, right? So if it breaches this or if it breaks this, then you can see a significant, you can say the bearish trend setting up. Else there is a high probability we can rebound from this level. So if I have to look at some auto, say Maruti. So now Maruti, the cluster area from which it gave the breakout was almost like you have the 7,038 and the price wise 7,165. So this cluster area, so right now this becomes a very crucial support, and nearly the prices are not approaching that. So that means the buying interest is coming at the current junction itself. Upper level, you have 7,800 now as a resistance point, right? So along the volume analysis will give you the holistically key pivot area. So which if broken or removed on any side can give a good trigger. Then you have something called as a stop and target. So stop and target is basically an intraday product only. So basically it is a volatility based product. So when you deal with options, you cannot afford to not look at the volatility. So basically each stock has its own volatility, right? So if I compare DLF with ONGC, it is not comparable, because DLF IV could be around 40-50, ONGC IV would be 25. So the expected per day move is different in both the case. So stop and target tells you basically what are the high conviction, so levels, upper level and the lower level for the each stock, and how it is moving. So if you look at Nifty, 13,617 was this conservative upper level already. So given the current wall thing, so this was the upper level. So if you look at the prices were gyrating at this point, and in the Nifty it was 30,443. So if it breaches this level consistently with the volume, then you can expect the moderate level coming up, else the prices can retrace back. So if so every day we can have like what are the key pivot levels. So if the prices are tending down, so we can say that 13,350 is the support area. Upper end 620 becomes the resistance area. So similarly, you can find out for any of your stock, and you can see how the prices have changed percentage wise. So like Bata India, it moved from the conservative upper and the aggressive level. So it was like approaching the aggressive level also. So in the stock, it's not necessarily stop at the conservative. So you get like agar conservative break kiya, next time moderate, wo break kiya, the next day aggressive. So you get the levels for the stock. So this could be used. Now I'll take you the seasonality one. So basically, seasonality is some of the old concepts only. So wherein like we always look at how the things have been year over the year, month over the month, the things have span out. So you put the symbol, you put the say the base year is 2020. I'm looking back 5 years data. So if you look here, how the things have been, we can see that. So to 2020 so far, it's more on the greener side. So from April onwards, we see a lot of positives which have taken place. In fact, you can say the last 3 years have been a positive month, correct? So December, but the Jan turns out to be little reverse. You can do the look back towards say 10 years also. How the things have been, you can see. So December, so January have been a mixed period. So you see a mixed data. So normally if you look at the third quarter is something where you have seen a good momentum, right? You can look out for any other symbol. Bank Nifty, if you look here, so Bank Nifty last 2 months have been considerably rewarding. Right now we are flat, right? So there are 3 tabs in IV. So you have price. So in seasonality, one is price. Second is IV. So basically, we are finding out which is the normally the month where we see a lot of IV, a lot of volatility in the market. So you have one called as IV. The second is called as a IV change. So IV is basically the last day of the month. What has been the IV? So we are just comparing the IV. So this has been the IV. So for the last 5 years. I do the IV change. I see that normally December we see the contraction in IV or the fall in IV. Then Jan again we see the spike in IV. So November, December is normally the months where the volatility is on the lower end. So we can definitely look here. We can always be singing that we can be a premium taker. So strategy. So we can have a limited risk sell strategies part of it. So like iron butterfly, iron condor. So it's completely hedge strategy, but we are the net premium taker in that strategies. So you can define the strategies based on the seasonality. Then you have this sector thing. So sector is something which we have made it proprietary. So basically based on all the instruments which are there in that sector in derivative. So it is not what the exchange gives the sector definition. It's basically the sector comprising of the stocks which are listed in derivative in that sector, right? So like if you look at the pharma has been like a good performer in 2020. In 2018, it was one side negative. Then if you look here, say oil. So oil, this quarter has been subdued. So prior June to September, we performed. So overall, we see like 1-2% move coming up in the December month, sorry. So ideally, you can have a look on how the things pan out. So say for instance, we look at the metal. So metal has been normally outperforms in December month. So if you look at consistent December, we see a lot of performance. January is normally the opposite what we see. So December to January, ideally the trend normally reverses. So it may be just you can keep a back of your mind, may not use as a decision making tool, but definitely as a filtering tool. Okay. So you can have a graph view, you can have a chart view, you can see how the NAVs have moved over the period in this sector. So seasonality basically to have a view of broader perspective move. Now, let me just run you through one important thing. So now, like when we are at the something crucial point, so what very much it's important for us to know is like how heated the market is. So it's like whether we are at the all-time high volumes or we are how the things are spanning out, if the risk is increasing or not. So basically, if you look at someone who has been in the market for a long time, you always say that कि OI है ना अभी एकदम highest point पे चल रहा है, अभी बहुत interest बन चुका है, अभी market में cautious होने की time है. So you often realize that this words start coming up again and again. So market-wide OI tells you basically what is the OI across the market. So taking the sum of futures and option, everything. So if you look here, I can go back to, so if I compare it from January 1st, 19. So practically we are at the highest point right now. So the OI, if you look, when we went to in the March fall, the OI fell considerably. So nearly it became half. And thereafter, gradually again, we have at the nearly at the highest point. So at this point, it's point to realize that we are not like completely out of risk. There are risks, and definitely there would be volatility which will be there in the market, and we have to live with it, and we have to adhere to our trading plan. So it's not like buy and hold. We need to be actively participating. So if I look at all, I do only futures. So this is basically the futures, how the participation, the OI have been. So reasonably like 1,60,000 contracts is something where the highest point have been in the last 2 years, and we are nearly there. Options, in fact, we made a new high, right? So lot of participation has come up. So we need to digest that thing and we need to look out. So market-wide OI helps you to know how much is the total contracts which are outstanding in the market. So something back of the mind when you're taking a large positions, keep these things in the mind, like how heated we are. Then something interesting comes index contributor, definitely, which we look out from an intraday perspective as well as from expiry month, everything. So when you're doing a daily part, so I'm trading the day, I should know which is driving the market. Is it which sector is driving the market, which stock is driving the market? Is it just few stocks, one or two stocks which is contributing entirely, or is it the broader market? So if I look today, the data, we were up 125 points, but it was a broader participation. So if we had a INFI, Lever, ITC, FMCG contributing. Then on the draggers, we had Divis Lab, Titan, NTPC, SDFC. So it was more a broader one. So that gives us a relief. Had it been just one or two things, then it's difficult to digest. So had that stock not performed, the scene would be completely different, right? Then you can do this sector and actually see how the contribution moves. So IT was the top gainer. 42 points was contributed by IT, followed by like a private bank. It was 16. Sorry, FMCG was 22. Then private bank was 16. Then you have auto, oil. So in Lagard's, we had only power and hardly anything which we had. So it was a broader market participation, right? Now, Bank Nifty, definitely there are only two. So private sector and the PSU bank. One interesting thing is like what I love in index contributor is like you can actually find out the contribution from any custom date. So if I have to look at since say last Thursday, December expiry was like a 26th November, right? So I pick up say 27th, the first day of the next expiry. So it takes into account that day contribution also. So in the December series, so from December series, like Bank Nifty is up by 375 points. And we see ICICI is the top contributor, followed by State Bank, followed by Kotak Bank. On the dragger side, we had a HDFC Bank, Axis Bank, and RBL Bank. So this we see that the private sector banks were losing out the momentum in the December series. Same if I have to do the analysis of Nifty. So we have strong outperformance in the Nifty. So we have December series 635 points, almost 5% Nifty is up. And you have Infi contributing around 116 points, HDFC 75, Asian Paint 54, TCS 45, Lever 45, iBank 44, LNT 43. So if I look at the sector, the top contributor is the IT, followed by the FMCG. So you know that the flavor of this expiry. So say for instance, after 1 week, do this analysis and see like how the flavor is, which sector is showing the strength in this expiry. Because as the position starts getting built up, the sentiments start getting built up, you can figure out like how the sector is panning out. And so we can have some positional strategy revolving around those. So index contributor gives you how the contribution have been. So you can do from any date. If you want to do it from say 1st Jan. So now you'll start seeing as we move towards the 31st December, all the calendars would be there, the top gainers, top losers, everything. So you can do your analysis yourself. Jan mein jao, 1st Jan select karo. Nifty up 11%, IT is the leader. More than 50% contributed by IT. Then rest all are FMCG, oil and pharma are nearly equal points, 200 points. Dragger have been the PSU banks. So 64 points we were down because of the PSU, and fertilizer 22. So this is something holistically, when you're doing some research, this data becomes very, very handy. You know, like now IT is heated up. You have a lot of performance in the IT part. So will that trend continue in the 2021? Let's look out for. So it can be endless. So we can have unlimited talks going around with the data, but it's very important. One thing to frame up your mind, if you're an intraday trader, you need to look at top-down approach. Look at how the sectors are spanning out for that day. Look at how the stocks are spanning out for that day. When you're intraday trader, you need to be precise about kaun sa strike uthana hai, or which strike I need to buy, which strike I need to sell. Then look out at the FNO news, because that gives instantly you the strike. You can look at the scanner also. Then charts. Don't forget to look at the charts, because that will actually give you the trigger to scale in, scale out. If you have a multiple quantity, decision to book now or later is something which can be given by the OI price and the Greeks chart. So you can definitely look out at those points and look. So this was something which we can discuss. Okay, so let me go through the questions. So I open the floor for Q&A. So before that, some interesting things we would like to discuss. So as you guys know that we are coming up with the event Option Symposium. So one of the most looked out for event. So have been receiving lot of good content. So basically a knowledge-based session, which really must from any trader's perspective if you're an option trader. So that's lined up for 23rd and 24th of Jan 2021. So considering the given situation, it's a virtual event, right? So look out, the speakers lined up are like some of the very known personalities in the option world, someone who have seen the various cycles in the market and stick to it. So basically how you have frame up the strategies. Option is an ocean, and each one have their own perspective of looking into it. So whether you are an intraday trader, positional trader, investor who looks option from as an investment opportunity, hedger, currency, equity. So it's a blend of all. You can say so. The noteworthy speakers we have Mr. Tony Batista, the co-host of Tasty Trade Live. Then we have Mark Sebastian. He's the founder and CEO of Option Pit. Then we have Matt Coy. He's a chief strategist in Certus Trading Incorporation. So everyone have a unique trading style. So that would be discussed in the option symposium. Then we have Saurabh Sisodia, co-founder of Quantify Capital. Then we have Mr. Rishi Kohli, who is the director in the Pro Alpha Capital. He has been known for handling the big, you can say, fund for the options book. Anupam Mitra, a well-known personality when it comes to currency trading, someone who is a very senior level in the financial sector specialist. Mr. Uday Dave, an intraday option trader. So everyone have their own blend, own style of trading. So we have a special offer going around with the Christmas. So you get a symposium ticket free if you buy any of your concept products, be it application, be it research services. So I guess more details could be given. So if you have any query, you can write to us at support@concept.com. Or you can drop an email to us at support, or you can put a chat also with us. So looking out for you guys on the symposium, something a full-on knowledgeable session with all the perspective, like a short-term trader, positional, you have an intraday trading, Nifty, Bank Nifty, not to forget that, in terms of stock option, in terms of Greeks, the statistical approach of trading options, someone has a technical approach of trading options. So it's a blend of all, right? So I open the floor for Q&A. Any tool to track option strategy like bull call spread or bear put spread? Yeah, it's Quantsapp. So you have it. So you can use the architect to see the payoff, and definitely you can put it in the charts to look at how the strategy PNL, you can see the net payoff charts as being looking out for. Then you have what interest rate value is used to get IV from Black-Scholes model. So basically, one thumb rule which we follow in the concept, we don't have the concept of taking interest rate. So we use the futures as an underline, and wherever the futures are not available, we use the fair price derived from the options. So since interest rate is something which is sort of like a very much debatable term, so interest rate is moved out of the picture, and we look up what the market traders have valuing the options. So you have fair value concept when it comes to the expiries where you don't have the futures, and where the futures are available, futures becomes the underlying. Can we additionally entry for sort by price percent or web or combination of a no? Can we enter like 2 days before event which intraday strong sell happened? See, lot of data are flowing. So basically we need to do our homework. So you have a lot which is taking place in the market. So always keep a watch on the data points. Look at the synopsis, look at the built up history, look at the charts, look at how the build-ups are taking place, look at how the open interest is taking place. Is there any fear building up? Then you can look at the triggers to find out the stocks where it is crossing the highest call or highest put. There are a lot of studies around, so you can book a demo. If you guys still have some query, you can definitely book a demo, and our advisor would be more than happy to help you out with any of your query with the application part or any of the product which you have. How can we decide yes it is genuine? Is there any parameter than the price action? So call and put unwinding features. So I doubt what does that mean, but basically call and put unwinding is seen from the future side as well as the option side. So which we dealt in the open interest, which we dealt in the future side also. So it's revolving around that. Have OI versus price charge. So you have the OI and price chart, definitely. So we saw that in the chart. And you can select, change the strike and see it. So basically, if I'll go to single chart, I look at, say, Nifty 24 December 20, 13,600. See, this is OI and price chart of 13,600 C. And then if I make it PE, I can look at the PE chart. So it's just at the click event. So you see how the 13600 P OI has increased and now the price has fallen. So this way, you can use the single chart to have a look. So fair enough. So guys, thank you very much for coming up and having the being a part of it, and looking forward to you guys at Option Symposium too. And if you have any query with respect to any application, any products of it, do write to us. Drop an email at support@thruquantsapp.com, and our team will be more than happy to help you out. Book your demo and get the application. Thank you.